Good morning. We will pay attention to the partnerships today, and we will especially pay attention to the general ledger entries. The balances that's given in this information will be the opening balances in the ledger accounts. Stipulations according to the partnership agreement, the partners are entitled to an interest on capital of 8%. You have to take into account that Humpty decreased his capital with 20,000 and Dumpty increased his capital with 20,000. The first entry that we have to do is the adjustment to indicate that there's an expense for interest on capital, and where we would normally take this expense that was not paid in time at the end of the year to the accrued expense account, we will now take it to the current account of the partner. So when we owe money to the partners, we will not transfer the amount to accrued expenses, but to the current account. My first entry will be the interest on capital. That is the expense account that increases on the debit side, and therefore we will debit the expense account to show that the total expense is 23,600. The double entry for this adjustment will be credited in the current accounts. And the current account is credited to show that the money is owed to the partners. Current account is equity. Equity increases on the credit side and decreases on the debit side. We credit the current account because that means the owner have more money in the business. His equity increased because he must still receive this money. Dumpty is entitled to a salary of 30,000 and Humpty is entitled to a salary of 36,000. First of all, we will do the adjustment again, showing that the expense account increases and that we still owe the money to the partners. So the current account will be credited with 36,000 and with 30,000 to increase the money owed to the partners, and we will debit the salary account. So salaries is expenses that increase on the debit side, and therefore we will debit the salary account. Then the partners entitled to 14,000 Rand bonus. That is also expense that will increase on the debit side. This money must still be paid to the partner. And we will credit the current account with the 14,000 to indicate that is the amount that's outstanding. So the first entries that we will complete is for interest on capital, salaries and bonus to complete adjustments, increasing the expenses and increasing the current accounts on the credit side. After we completed the adjustments, we will have to close off all these nominal accounts. So interest on capital will be credited and will be debited in the appropriation account. The trading account will follow with the profit and loss account, and then the profit that we made in the profit and loss account is recorded in the appropriation account, and all the expenses payable to partners will be recorded in the appropriation account. So the salaries accounts will be credited and the appropriation account debited. The bonus account will be credited and appropriation account debited. So that indicates that all these expenses that we created when we did the adjustments, because they all nominal accounts, must be closed off to the appropriation account, because at the end of the year we can't have any balances in any of the nominal accounts. Then we take the 140,000 and we subtract the interest, salaries and bonus from it, because we paid that out of the 140,000, and we determine how much profit is left over, and the amount that's left over will be divided between the two partners in their profit sharing ratio. That is the capital balances at the end of the year. So we will close off the appropriation account, debiting the appropriation account with the amount that's left over, and we will credit the current accounts. This is a closing transfer. So where we close the appropriation account, we transfer those amounts to the current account. Then we will also close the drawings account and debit the current account with the amount that the partners already collected. So on the credit side of the current account, we show all the amounts that the business owes to the partner. On the debit side, we deduct the drawings to indicate that some of this money was already received. Therefore, we will balance the account that will determine that the closing balance of Humpty is 71,000. The closing balance of Dumpty on the debit side is 5,040. This indicates to us that Humpty didn't take all the money that he's entitled to. The business still owes him 71,040, where Dumpty took more money out of the business than he's entitled to, so he actually owes 5,040 to the business.